Hello and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, we're going to be taking a look at the Bitcoin rainbow chart as well as some other indicators. And let's start off with fear and greed. And crypto still down in the fear area. It was down into, I believe, into extreme fear just a couple days not too long ago. So starting to hang out down here in fear. And something that we were watching for is to see were we possibly making a reversal of trend here. We have lower highs, lower lows. So far, we have a higher low for now. That could always change. And that's probably where a lot of us are leaning as far as the trend of the market. But something else I'm watching for is there's been a lot of comparisons now from the March peak to the peak last cycle in 2019 in June. And I think one of the things, at least from what I see here on the fear and greed, is how it spikes up into greed and then comes down in the fear. And you can see that spike and then it comes down. But what I'm looking for is more accumulation in the fear area. When crypto in December 2020, as you see the date right there, as it was accumulating up in the high areas of greed, the all-time high came later. But when it's consolidated or accumulated, if you will, down in the fear areas, that's when oftentimes you can see much lower prices. Now, after June here, funny enough, this is when we made the true all-time high later. But when fear and greed, when fear is stuck around for a while, the absolute low came in November. So if we do start to hang out down here for a while, then I think maybe we are getting close to entering a bear market for crypto. But here in Market Psychology, again, we look for opportunities when there's fear. And if there's a bear market, one way I like to attack the crypto market, not financial advice, just for me, is dollar cost averaging in. So if we are here in these lower zones, and yes, here in bear market, it sounds bad, I am looking to add to my positions down here, not obviously up here when things are exciting. That's when a lot of retail and dumb money gets in, is when things are, when the market's running hot and when there's excitement. I know so many people, they bought into crypto back up here instead of down here. So if you want to get more value, you could just look around at the views on a lot of YouTube channels or just the crypto space in general. People are losing interest. And should we get another cycle when they're boring times, when they're fearful times, that's a good time to dollar cost average in. So going over to the alt season index, you can see here, still overall positive. We still have a positive trend. And something else to consider for many of us is that we really, as we're accumulating altcoins, we're looking for Bitcoin dominance to go down. And that's when alt season can be really awesome. So going back over to the rainbow chart, right now you can see we have dipped down into the upper end of the accumulate phase. And something I've noted, even at worst, let's say, and I have it here, you can see the date at September 14th. I won't move the mouse so I don't lose it. But that's right around when the Fed's probably going to cut rates. And if the market is going to be bearish into rate cuts, take a look at that teal box that we're currently in, the accumulate box, the third one from the bottom. You can see it has a low of around 46,000. We're going to get into why that's important in a second. But let's say it even gets into the buy zone. That would be between 33 and 46,000 if it got below that. But I'm not totally sure it is going to get there, but we'll look at the chart and see what that would mean for Bitcoin. So right now, last week, let's add on, we don't have to add on our buy sell signal indicator. We know there's a sell signal playing out. But when we had this big candle, this big red candle, I talked about how one reason I use Heikin-Ashi candles is it's better to show at showing a trend, and usually you get at minimum, usually at least a couple. So we are starting out with another weekly red candle, and you can see here we are at the lower end of the channel, and it's the fourth time we've tested this channel. What does have me concerned is how not only is Bitcoin at the lower end of this channel, but it's also at the 50-week moving average. Now, for most assets out there, most ones that act normal, even though Bitcoin is anything but that, the 50-week moving average right here, the orange line, this is the 100, this is the 200, but the 50-week is the separator between a bullish trend and a bearish trend, typically. So it's possible we might see a really good bounce here. And I'm sure a lot of us out there are hoping that'll happen. However, you can't deny that this just looks like it has increasing weakness. You can see here how it's bouncing between the upper and lower ends of the channel, but then the last time it just kind of died. So I'm wondering if it's losing strength here and possibly getting ready to roll down over. And I have this Fibonacci level here that's 786 at around 50K. And then remember what I was telling you on the rainbow chart, that lower end of that teal band was at 46K. Well, the 100-week moving average is moving up into that 46K region. So the moving averages are always changing. But one reason I really like this level, well, there's a couple. One, deeper value, obviously. Two, there's some price action. So I think there's some good opportunities for support right here. And I did mention briefly how if it got into that buy zone, that blue zone, where that would be, we have the 618 and the 200 moving average. And by the time, if that played out, I would assume it would take a while and the 200 would be closer to that line. That would be in the high 30,000s. And there's something kind of coincidental about all this. And let's go back to 2019, make that comparison. I've been wondering this whole year, and as time's gone on, I feel like as the days go by, it is confirming that we are in somewhat of a 2019 mid-cycle top correction. But you can see here, by the way, these big red circles, that was just to signify that they were number of 30% drops. There were 4 of them. So let's clean this up a little bit. We don't need to have a bunch of those up there. But you can see as Bitcoin started to look weaker, as I was just talking about, I guess I compare that last little run to this area right here, how we had these lower highs and then eventually it was just breaking down and got under that 236 fib, fell down to the 50, but you can see it did have a little rally. So maybe we're going to have a little rally into the rate cuts. Who knows? Just something to look for. But then it died all the way down to the 100-week moving average as well as the 0.5. And by the way, my moving averages, they are the EMA moving averages in case it's different from what you have on your charts. So we did hit that 100-week moving average. Now, this was the COVID crash, and whether or not we would have gone down here without COVID, who knows? The yield curve, which I talk about that in the stock video, subscribe if you want to hear more about that. The yield curve was inverted before that. I want to say somewhere in 2019 in here. So people are saying there's going to be a decent correction in the markets regardless of COVID. Be that as it may, you guys can see that before Bitcoin made its eventual top, getting down here to the 100-week moving average was really great value. So again, after the mid-cycle top, this is just the last cycle, that there wasn't better value than what you're able to get in down here. And these are sometimes for people not the most fun times to buy because again, there's fear in the market, it's boring, people are less interested, there's no hype. And guys, as you can see, the inverse is true, is that in those times you couldn't have gotten better value, at least for Bitcoin, and I'm sure many of the altcoins. So do watch for this. If we are in a similar situation, you won't want to miss out on that. Now, whether or not the rate cuts coming up by the Fed means that we're going to have a harder landing before the next cycle top, we'll see. I have a couple little graphs here. This one is the one I'm watching the most, is that if the Fed cuts by 50 basis points, then I think there probably will be a hard landing sooner than later for stocks and crypto. But let's say they're only cutting by 25 basis points now. Every time's different. So, take this for what it is. But this is part of how I'm going to be approaching the market is if they cut by 25 basis points, I personally will feel like that maybe the top will be coming in next year as a 4-year cycle, as we typically do. So just something to watch for. Let's take a look on the daily time frame real quick, and you can see Bitcoin had a nice little bounce off the lower end of the channel. Now we'll see what happens. Last time it bounced off the lower end of the channel, this was that big 30% correction. It was able to fight through these moving averages that became resistance, but we'll see what happens this time. These moving averages are coming down. Is Bitcoin going to come back up to this 60K level and then eventually turn over? Maybe. We'll see. Going over to Bitcoin dominance before we finish off on the rainbow chart. Bitcoin dominance, let's zoom out to the weekly. Really, I'm not looking for alt season or being bullish on alts unless Bitcoin dominance is breaking underneath the 20-week moving average, this red line here. You can see how every stock, crypto, they act differently, but there's typically a moving average that they're in love with, and those moving averages are in love with. Whenever it does something different, that's when you want to pay attention. So right now it can keep coming down, but unless it goes under the 20, I'm not really going to change my mind on anything. And again, Bitcoin dominance is the overall percent. 57% of all money in crypto is in Bitcoin. Tether dominance, we've talked about this before, that when this is bullish, we're typically bearish, and that's what we got right now. So let's go over to the rainbow chart here just in a minute. I do want to remind you guys that on the average, when there is a new all-time high made in the crypto market, so in December of 2020, when Bitcoin broke the 2017 high, eventually made a high at 69,000. When you average all the cycles, it's about 300 days, which puts us at the end of this year. We're going to go over the different possible price predictions, and then from the halvings, there's a 484-day average, and that takes us closer to the 4-year cycle. But this has us in August, not November. So let's go over to the rainbow chart and show some of these. So if by the end of the year, let's say Bitcoin is bullish, we can look at December 20th, then what might be some areas to look for? You can see that yellow box, the 85 to 100K, and something to note with Bitcoin, if we zoom out here and take the fib off log scale, it's a good way to show price targets as it extends. Is that the 1618 is at 100K, the 2618 is at 155K, the 3618 is at 210K. Now, something important to note with the 2618, should Bitcoin get here, its market cap, you can calculate this out yourself if you don't believe me, will be around 3 trillion. I find that kind of coincidental because, or ironic, I should say, because the top stocks in the world, Apple, Microsoft, Nvidia, have been around that 3 trillion mark. So I'm keeping an eye on this 2618 extension at 155K. But the 1618 is the one that's the real test first. So you can see there's the trend line from the Bitcoin tops that get there. We have the trend line that Bitcoin's been in love with this whole bull run, pointing there, and the 1618 points there. So a lot of confluence right here. So that 100K mark, again, if we're looking at the end of this year, the 100K mark would be in that yellow box. Now, you can see here those orange boxes is right around where the 150K mark would be at the upper end of the yellowish orange or the lower end of the orange box. And that's where I'm looking for the next cycle top. So you can see that each halving, Bitcoin has gone up a zone. Okay, it's gone up a color. First halving was here, second halving here, third, fourth. Okay, you guys can see that right on your screen. Well, we've had the opposite true, is that when we've had these peaks, you can see this one was above the max bubble territory. The 2017 peak was in this second lighter red color zone. And then last time, Bitcoin with the double top hit here, and then the lower end of, well, actually, sorry, it hit here, and then the lower end of that box here. So I'm looking at these two boxes right here as far as the cycle tops, because we have the lower end trending up and we have the higher end trending down. So I am looking in between these orange boxes. I'm not looking for $1 million Bitcoin, 500K Bitcoin, or even 300 Bitcoin. I'm looking between 1 to 200K. And I know that's a big number and it's kind of a cop out, but that's why we have those fibs there. So we want to see how does it react on those fibs? What's Bitcoin dominance doing at the time? And so let's say Bitcoin has a top around that August area, as we talked about. Heck, let's actually start with March. Why not? Because we had a top in March this time around. Let's pretend or say we have a top in March of 2025. Well, you can see that orange box is right at that 150K level, the lower end of the orange one and the upper end of the yellowish orange one. But let's go out to that August time frame, which is the average from the halvings, and you can see we'll just be here in mid-August. It would be down in that lighter orange box if Bitcoin were to top around 150K. Now, I will say the longer we wait for the peak, the more I believe that the top will be higher. So if we get an earlier top, then I'd be looking at that 100K to 150K. But the more time it takes to get there, I think that the higher likelihood that the overall price could be higher as well. So let's say we get a 4-year cycle. We have all these December, November tops, 2013, 2017, December, November, 2021, December, November. Let's say we get another one of those next year in 2025. I'll go early December there. You can see there the orange box, the lower end is at that 2618 at 150K. The upper end is near that 3618 that was at 210K, somewhere around there. And so I think that kind of lines up with the trend we are seeing here. So here we were in the top band. Here we were in this one. Now let's take a look at this orange one. Okay. The end of 2025, we'll just be there in November. The end of 2025, if we're there in that orange band, that would have us out in the 3618. So just something to watch for. If the Fed's going to cut rates kind of low and the market still has time to run, then I think this gives us reason to be optimistic. We see these big cycles, and if Bitcoin was to get between 150 and 200K, somewhere in there, then there's no denying that where it is right now in these lower zones, that this is a decent time to accumulate. Now, you can see here, mid-cycle top, last time Bitcoin got up to the yellow zone, and COVID aside, it came down 2 color zones. Now, that is quite a drop. So here it came up to the yellow zone. You can see here we've already gone down 1. And if we go down to the lower end of the zone, again, the teal box is 46K. So that's why I'll finish off with this. Going back over to the charts, I want to fix my Fibonacci scale before we zoom in here. That's why even just on average of how much value it lost, whether you're taking a look at the rainbow chart or the historical chart before, if Bitcoin gets under here, I myself personally, this is just education for you guys, I'm not going to be missing out on any of this opportunity in here if it gets there. I'm not saying it will. Who knows? We'll probably have a nice little bounce here into the rate cuts, but if it then does roll over before then, after, whatever, I do not want to miss when Bitcoin is under that 50-week moving average. Even though you're going to be hearing Bitcoin's bearish, Bitcoin's bearish. Okay, yes, technically it is. And it's at deeper value. And there's ways on this channel, subscribe to learn about this, where I show or I share how I dollar cost average in at deeper value without just buying falling knives and getting caught, buying in here, hoping it's going to turn around and then boom, it goes lower. So there are ways to reduce risk in dollar cost averaging. Subscribe to learn more about that. Anyways, let me know what you guys think in the comments below, and I hope you have a wonderful week. Take care.